All righty. Hey, everybody. Welcome to February 5th, Sunday's weekly market report. Just going to do a real short one today. Looking at the markets, there weren't a whole lot of particularly great setups going into this coming week that I saw, at least for the bulls. And I am a perma bull at heart, so I usually lean towards bulls and then just watch bearish charts for either major sell-offs to participate in or looking for them to clean up and show bullish entries. So anyways, right now, let's just look at the S&P 500. This is the futures chart. Just reminder, I usually look at the /ES futures chart instead of SPY, but you can look at either one. Right now, we are a bit overextended on the daily chart. I would love to see this continue to pull back into the rising nine, just like we've done over the last couple of weeks here. Any flag-based pattern into the nine around 4,100, or if we get a deeper pullback, anything down to about 4,000 on the futures chart, I would still consider bullish and be looking for a bullish retracement or bullish flag, depending on how deep of a retracement we get. If we kick this out to weekly chart, you can see that we are a little overextended on the weekly, not bad. Again, that retracement down to the 4,100 or 4,000 mark would really actually be coming back down on the weekly to test this 50 period moving average. So I would love to see a consolidation or retrace test down to between 4,000 and 4,100, see that kind of stick the landing, form some support, and then move higher from there. So that is the ideal world. If we don't get that to develop at least some kind of a high base that will let these moving averages come up a little bit to be able to play the next upward movement. Really, I see next upward movement probably coming into the 4,300 mark as long as this doesn't misbehave and break significantly to the downside. I definitely see more upside potential in the market. I'm continuing to see really nice bottoming patterns across the market. So that is for the S&P. Now, if we drop down to the Russell 2000, this one has really led the charge. It is a little bit more overextended. I would love to see, again, some kind of a flag-based pattern coming into around 1950 or a deeper retracement into about 1925. If we put this out onto the weekly chart, you can see that really we have set the higher high here based on the pivot here. We have the higher low here. So the next piece on the weekly chart, higher highs, higher lows, higher highs, higher lows, right? So we want to see the retracement come back down, test on the breakout channel here, and then continue its march higher. So that would be kind of the next pattern that we would be looking for on the Russell 2000. If we kick this back to a daily chart, looking really anywhere, like I said, from the 1950 down to 1925, we could go as deep as wherever this 20 period moving average is. It is just breaking above 1900 right now. I'm kind of anticipating that unless we get a sharp sell-off, which I'm not really expecting, that this will kind of meander its way up and meet the price action probably down here around 1925. That is my base case for where we will see a retracement. If strength really comes back into the market, I might be willing, like I said, at 1950 to go ahead and take a stab at it, but 1925 would be more comfortable for a risk to reward perspective. Going out to the Dow Jones, really nothing to see. Again, this one had been leading for quite some time, but it has been taking a significant breather the last few months here, excuse me, last several weeks. I guess that's about 2 months actually. I don't see many trades in this regard. Money has been shifting out of the Dow Jones Industrial Average a little bit and going more towards the growth and small cap stocks as a rotationary trade. So I'm not super interested in anything on this. If it does come back up and form a nice pattern, breaking out of like the 34,500, 34,600 mark, instead of playing this index, I would go and look at specific trades on stocks within that index. And then finally, going up to the NASDAQ 100, we are overextended on that as well. We put in a double bottom, had the nice W formation here, which is a classic bottoming pattern. Really love the constructive nature of this chart. Broke above the 50 SMA here, which is really nice. I would love to see this consolidate back and retest the highs of the breakout here. So that is somewhere around 12,000 to 12,100. If we pull this into a daily chart, we can see that more clearly. Any flag down to test the 9 with confirmation higher, or more comfortably down to that 12,100, 12,125 area. Any doji or signal candle that we get on there with confirmation the following day would be a strong buy, in my opinion. RSI is overextended, so that should clear up a little bit as this price pullback develops. Our MACD is significantly bullish now, have been setting higher highs and higher lows. Both of our signal lines are above the 0, which is bullish. So I see this continuing with a little bit of a flag base and then continuation higher. So that's my base case for the NASDAQ. Switching through, let's go to Bitcoin real quick. Not a whole lot to see here. Obviously, it powered higher to the tune of, what is that, almost 42 to 45% over the last few weeks. Needs some time to chill out. I wouldn't mind if this actually broke support here and came back and tested maybe the 22,000 mark. If it got deeper than that, I probably would no longer be interested until it re-solidified a better pattern. But if as long as it stays above that 22,000 mark, I'd be looking for a breakout here moving forward above about 24,000. So we have about a $2,000 range there that we're playing. In crude light, we had been talking about this breakout here. Everyone and their moms and dads and grandpas and uncles and aunts and cousins, everyone had been talking about the potential breakout here. Did not materialize. Instead, we got a ton of volatility. It's dropped over 10% in the last about a week and a half. Now we are going to be looking to see if this support around 72.50 can hold. And if it does, it's going to need some time to kind of chop back and forth and get back up here. A breakout eventually of that 82.50 is still alive and well, but this is going to need some time to develop. If this lower support level at 72.70 roughly does break, it'd be coming back down to test the support down at 70 and looking for a double bottom on the weekly chart there. So that would be kind of our next base case, would be looking for it to come into that 70 level and then come back up and retest the upper edge of the channel. So right now, basically bearish to neutral. It's just kind of stuck in this sideways consolidation. I wouldn't mind if it pulled back to that 70 layer before it came back up and retested this breakout channel. Ideally, I would like to see it hold where it is now and move higher and then get into some kind of a high base pattern again, just like we had over the last couple of weeks here. If it comes back up in high bases again here, really all that's done is wasted a little bit of time, but it's allowed these moving averages to round a little bit by that point. So it would be a better setup at that point than it was this previous time, as long as we do hold these lows. Going in, Ethereum, pretty much same thing as Bitcoin, still overextended in my estimation. A break of about 1,700 would be playable to the upside, although I would love a little bit of consolidation back down into the 1530, 1540 arena before that happens. Gold, we talked about this over the last couple of sessions. On the second, I said this big, ugly candle, this bearish engulfing candle really showed there's going to be more selling pressure. We got that on Friday. The selling pressure continued, dropped fairly significantly off the highs in 2 days. We were down over 5%. Getting a little doji to start the trading week here in the futures market Sunday afternoon. Let's see if that level around 1870 can hold overnight. Otherwise, we're probably coming down to test the 1850 mark before we'd find any support. I don't necessarily think the gold trade is over here, but it had run so far and so hot here. It was up almost 22% in 90 days. So I'm not going to blame it for pulling back. And by now, everybody that follows these videos knows that this is directly related to what the dollar is doing. because of the Federal Reserve and inflation data and stuff that came out last week. The dollar did get a significant bid. It broke back above its shorter term moving averages for the first time in a long time. It also looks like the 9-period moving average might actually be looking to clip above the 20-period moving average for the first time since this sell-off started in the dollar. So if that happens, I wouldn't be surprised to see it come back up to 28. In the bullish thesis for stocks and for gold, we don't want it to get above about 28. Ideally, it comes up, hits its head on that, and chops back sideways and kind of goes into a consolidation zone down here for a while. If that consolidation happens, that would be bullish for gold and bullish for stocks. If it doesn't, if it does break through this and gets legs to the upside, we might see deeper pullbacks in the stock market and also the gold and precious metals market. Finally, looking at silver, pretty much the exact same thing. Massive sell-off here. It's fighting to try to find support here around 22.20. If that breaks, next support level would be down around 21.80, and then final support would be around 21.50. I really don't want to see it get that deep of a retracement down there. Ideally, we want to see that hold above this 50-period moving average, and even more ideally above the 20-period moving average. So really $22 is the line in the sand to me, that it really needs to hold above $22 to remain a solid bullish posture without going back into some kind of neutrality here for a while. Natural gas, I gotta show it just because this has been a ridiculous sell-off. I honestly cannot believe the length of this sell-off, the veracity of this sell-off. There's nothing to see here other in terms of trading, other than just pointing out that when a setup breaks and momentum gets generated to one side or the other, you do not want to try to catch that falling knife. So anyways, there's nothing to see here in terms of trade, at least until you break back above the 9-period moving average on the daily chart. But even then, you would still be obviously in a bearish downtrend, and you would be counter trading this if you were looking for a bullish signal. So if you are interested in playing natural gas, honestly, there are better places in the market to be focused. But this is going to need weeks, if not a couple of months, to clean itself up and really show an actual bottoming pattern. Like we'd had over here, we had inverted head and shoulders. Here are the shoulders, and then the break above that line. So we're looking for some kind of W pattern, double bottom, some kind of inverted head and shoulders, some kind of 1, 2, 3 pattern where you get the break up, setting a higher low, and then a break above that horizontal. So something like that. Really nothing to see here until we get something like that happening. And then last but not least, copper often leads the market and is a really good barometer of market and volatility and just the risk appetite in general. This was a much steeper sell-off than I would have particularly liked. But if we kick that out onto the weekly chart, it actually is fairly well behaved. The last time we got this really nice big push up and followed by a doji candle, a low volatility candle here on the rising 9 EMA. It was all systems go, pushed up again, consolidated, broke out, and pushed up again. So I'm not thinking that this has done anything wrong, even though on the daily chart, it was a little bit more velocity to the downside than I would have liked. I do see potential here for a trade to the upside if we get some consolidation here and then a nice trigger higher. I won't be opposed to that, but it needs a little bit of time to work out the volatility here. So anyways, I hope that helps, guys. Like I said at the beginning of this video, I didn't see enough individual charts that were worth highlighting this week to give any specific trades. Right now, I would be focused on setting up watch lists for stocks you want to own long-term once all this volatility subsides and the market does truly turn a corner into the bullish mentality once again. It is only a matter of time until that happens. So be keeping your eyes out for stocks you want to own long-term. and I'll continue to update you as the weeks go by on any specific trades that I see moving forward. But this week, I'm going to be focused mostly on taking profit on things that I have to take profit and playing defense on stocks or option positions that I need to play defense on. So anyways, make sure that you are staying within your risk tolerance rules with the volatility we have right now. It's very easy for traders that don't have automatic stop losses in place to protect them from downside risk to get in over their heads. So be cautious of that. Make sure that you are position sizing accordingly to the risk that is in the market. And with that, I guess I'll just say, comment below, jump into our Facebook group and comment there if you have any specific charts or anything that you want me to analyze or look at this week. Like always, just post them and call my attention to them, and I will do that. Talk to you soon, guys. Have a good trading week. Bye.